My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to a special Seattle edition of Mad Money from Starbucks World Headquarters. Other people make friends. I'm just trying to save you a little money. My job is not just to entertain, but to put days like this in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Let me think. Heads, the Bears win. Tails, the Bulls lose. And wasn't that today's miserable setup? And it drives me nuts because it is a false construct created by the media and timid money managers, all stuffed into a seething cauldron of negativity that sent the Dow plunging 1,276 points. S&P plummeting 4.32%. And the NASDAQ nosediving 5.16%. By the way, that was the biggest decline since June of 2020, as people fled the stock market for greener bond pastures, or frankly, just plain old cash. Look, I cannot blame anyone for panicking after we got still one more red-hot consumer price index number, showing that non-commodity inflation has yet to peak. Look, I know it was a horrendous day. It was a horrendous day no matter how you slice it. And I don't like the action any more than you do. I am not sugarcoating how bad it was. But as much as I appreciate two-year Treasury notes that can now give you a 3.75% yield, I can't believe how fast that's moved. Basically risk-free, becoming a powerful competitor to stocks as well as a strong harbinger of recession. I still think it's a mistake to abandon stocks entirely. Hey, look, you got some spare cash. You can park it in Treasuries to give you a good return. However, if you dump all your stocks here, you are acting out of fear and panic-driven decisions. Are rarely good ones. When I say that today was the setup for the Bears, a rigged fight. Some of that's because there was a last-minute surge in belief, buoyed by the big run in stocks leading up to this number, that this morning's CPI's reading would be lower than expected. I get that. We've seen rents starting to come down. We know car companies are finally getting enough chips to go all out with production. Beef and chicken prices, we've confirmed, are dropping. We know oil and gas they've been consistent decliners. Companies that raise their prices are starting to lose market share to others that don't. Witness McCormick, the spice company we talked about just last night. There's just one problem. Every one of these changes simply didn't occur fast enough to make it into last month's consumer price index data, which is why this reading laid the market to waste. Hence why the Fed has indicated it will hit us with a 75 basis point rate hike next week, and possibly another one at its November meeting if we don't get more encouraging inflation data. No wonder short-term Treasury yields have soared while Treasury prices have collapsed. If that doomsday scenario of two more triple rate hikes comes true, who the heck needs the two-year at 3.75% when Fed rates are going to get you 4%? Worse, as soon as we saw the CPI print, we heard chatter, and I got to tell you, I get it, and I think it's ugly, but I get it, that we might get a full percentage point hike. Unheard of for the ages. I don't believe it, but I understand people are talking about it. Now, at the risk of painting an alternative picture, imagine we had gotten a CPI number that was slightly lower than expected, rather than slightly higher. And remember, this reading was only a little worse than the consensus. If it had been a little better than expected, the same people who were moaning today and groaning about rampant inflation would be telling a very different story, believe me, but it would be just as negative. It might go something like this. Today, we had the first signs of a recession in the making, a crashed airplane, if you will, because the Fed is determined to take rates up another 75 basis points next week, just when inflation is beginning to cure itself. That's right. The most important components have begun to go lower. Cars, food, rents, even after gasoline. But the tone-deaf Fed, now it's going to crush us, sending us right through the windshield anyway. Then they make a big production about how Powell doesn't realize he's winning, and he's determined to cause a severe recession for no reason whatsoever. Now, I am guaranteeing you that would have been the story today if today's CPI number had come in a little bit cooler. So let me ask you, why the heck won't anybody give this guy a break? Why won't anyone give Jay Powell the benefit of the doubt that he will get it right? No severe recession, no endemic inflation. He knew the number was coming in hot. He's been talking about raising rates by 75, not 50. Right? I mean, everyone was talking 50. Remember, he was the one who went to 75. He's done a much better job than his central banker compatriots in the rest of the world. He took rates to zero to save us from a catastrophic COVID recession that many other countries had to go through. Once we got effective vaccines, he realized business would snap back, and he eventually started raising rates, unlike the hapless Chinese Communist Party, which refuses to use the good vaccines and keeps locking down chunks of the economy, regardless of what it does to actual, let's say, thought prospects for the way China's going to turn out. As for inflation and the supply chain crisis, these aren't U.S. problems, they're worldwide problems. I defy you to show me a developed country that's in better shape than the U.S. right now. You can't do it. So we should sell stocks on that? Was Powell a little behind the curve? He's admitted that was his whole rap. Sure, but he's not behind the curve like everybody else, especially the European Central Bank. And now he's ratcheting rates up as fast as he can. I don't think he needs to go 100 basis points because so many companies have already taken action to tamp down inflation. Plus, a 100 basis point hike would terrify people. It makes you think we're in Weimar Germany, a situation where the price of bread doubles every day between breakfast and lunch. So how come nobody wants to give Powell the benefit of the doubt? Why are so many money managers committed to being negative? My email is flooded with people who think this guy's a total idiot. I think it's because they're fighting the last war, the war of 2007, when the yield of the two-year Treasury traded as high as it did today, not long before, yes, the Great Recession. Like then, like now. Hey, pretty simple. But this is not 2007 or 2008. Back then, we had a dangerously over-leveraged system. The consumer was over-leveraged. They were still flipping houses left to right with no documentation. The financial world was packaging bogus mortgages into bundles and then writing all sorts of derivatives on them in order to game the system. You couldn't even untangle the stuff. The whole thing was a house of cards. That was the age of mass bankruptcies, mass foreclosures, runs on the bank. Is that like now? Does that seem at all like now to you? Just this morning, we actually heard that bank defaults are shrinking. Again, though, we have that false dichotomy because when the facts change, the bears, well, they just changed the darn narrative. More like, we're either headed for a dire recession or the economy is so overheated that the Fed's going to deliberately cause a dire recession to cool things down. They can't imagine a middle ground, like you and I would think of, where we actually do thread the needle. So why bother to stay the course? I mean, after today, you have to say, what the heck is Cramer talking about? Well, I'm going to give you a couple big reasons. First, when it comes to the fight against inflation, we have already won some major battles. Oil's come down huge from its highs. Okay, maybe because Russia's flooding the world with crude in order to pay for its war. They're selling through India and China at lower prices. The longer the war lasts, the lower oil goes. Second, the real inflation hit from the war in Ukraine has to do with natural gas for Europe. But now the Ukrainians have made some major breakthroughs, and if they can win decisively, and they can, looks more and more like that each day, then the price of natural gas is going to fall because there's no reason for Russia to choke off the supply to Western Europe if there's a truce. In fact, by the way, natural gas prices have come down hard in the last few days. Third, it's important to recognize that the so-called embedded inflation that everybody's got you so scared about will only last until the labor market loosens up and we see the end of mass job hopping. I think we're already headed in that direction as we see more layoffs. You can't job hop when it's harder to find work. We're already seeing it in tech and finance. Other areas will follow. Fourth, there's a failure of imagination among the bears. They look at embedded inflation and can only think of one solution: taking the federal funds rates to heights not seen since the early 80s, when Paul Volcker engineered a horrific recession to tame inflation by taking rates to the high teens. I think Powell's made it very clear he will stop embedded inflation by any means necessary. I like that. But I don't believe we need the full early 80s treatment here. The whole idea of rates in the teens strikes me as totally out of touch with reality for everybody except for the people who have a microphone. Finally, we're not looking at a collapsing earnings scenario, not after outfits like Starbucks, where I am now just gave us a staggeringly positive outlook this very afternoon. Buy, buy, buy! Buy, buy, buy! Buy, buy, buy! Look, I'm not saying you need to buy something here yet. We only bought one stock for the charitable trust today. One, despite this giant decline. And warned people that we don't want to be aggressive ahead of Thursday's club meeting at noon. We know a bounce may not directly be in the offing. We just had a huge run. We'll assess the damage in a deeper dive then. But the bottom line, we sure weren't selling. We didn't join the throng. You know why? Because we think the throng will ultimately be wrong. Let's take calls. Let's go to Kimberly in Iowa. Kimberly.
Booyah, Jim from rural Iowa. Welcome back from vacation.
Oh,
I'm wondering
thank you. It was a
about-
nice one. I was with my wife. We had a good time. Good time. What's going on?
The world needs clean energy, and I'm wondering if we have a company that is poised to provide hydrogen and nuclear. I'm wondering about Honeywell.
Okay, I think Honeywell, we bought some today. It's funny you mentioned that. So one stock we did buy, we bought a little of that for the Travel Trust. Why? For precisely what you said, and because also we think with travel, aerospace will follow. We think the throng will ultimately be wrong. On Mad Money tonight, we're coming at you from the Starbucks Investor Day and going one-on-one with interim CEO and visionary Howard Schultz and his team, he's over here, to learn more about the company and his tenure at the helm of the coffee kingpin. Then, from consumer spending to food inflation, Costco has its finger on the pulse of a host of metrics. And I'm learning more about what the company is seeing from the CEO. And believe me, it's a positive story. Then on Tough Day for the Market, I'm actually offering a more optimistic, nuanced viewpoint and helping you find opportunity amid the sea of red. From Starbucks headquarters, stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.